Let's go indeed. How's it going, guys? How's it going? This is a impromptu live stream considering the markets are dumping. You guys know what Mango does when the markets are dumping. We put off all plans and we come hang out with you guys. So those of you who are here, make sure to hit the like button, and if we get enough likes, I have a special surprise for you guys. Someone may join us on today's live stream. But before we do any of that, could you guys just do a quick confirmation check for me? Can you guys hear me a-okay? Am I too loud? Am I too soft? Is the music too loud? Is the music too soft? Etc, etc. Just give me a quick heads up on all of that on the chat. Also, let me know what you guys think of Bitcoin over here. Bullish or bearish? It's not a very difficult answer at the moment. So that says all good, perfect. That's awesome. How's it going, Sid? It's been a while since I've seen you in the live streams, man. Thank you guys, thank you for the heads up, or rather the A-OK on the audio. I tend to usually struggle with these things, but seems like everything's fine. The music's fine too, right? Alvaro says bearish, but you can always play the 12-month chart indeed. Yeah, when in doubt, zoom out. When feeling bearish, zoom out. That's the power of Bitcoin. All you gotta do is zoom out, and all your troubles are long gone. But hey, you shouldn't get in the habit of doing that, especially if you are in your trade, right? If you are trading, especially on leverage, you gotta take responsibility, man, and manage those trades. And we'll be talking about all of that today. And we do also have a special guest with us. Do you guys want to hear from the special guest? If you guys want to hear from the special guest, let's get those likes up. I want to see at least 20 likes. There's 25 of you over here. All it takes is another 10 of you to go ahead and hit the like button. Sid, what are you thinking? Bullish or bearish? Sean, what about you? Is it time to long or not? Let me know what you guys think on the chat. Let me know if you guys think it's time to long or is it time to wait. Should we just be waiting patiently? Are we going to get lower prices on Bitcoin, lower prices on Solana, lower prices on Cardano, or is it time to start buying the dip? We have more than a few things to talk about today. SPY at 404, cracking that 400 region, or taking a crack at it rather. US 10-year yields hitting 3.15 like we suggested it would, or rather pointed out to that target last time around. Things are coming to a culmination soon, inflection point indeed. Sad but bullish. Rusu Paul says it might bounce a bit, profit taking and such. Yeah, that's a good point, man. Yep. Exactly. If I was in a short position over here though, here's the thing, if I was in a short position over here, I wouldn't be looking to take profits. Not like I am in a short position on Solana actually, and I'm not looking to take profits, right? So that's how I'm kind of judging it. However, there are some things pointing towards a bounce in this zone over here, right? I don't have a high conviction on this, but we'll talk about it today. Again, like I said, if we do get enough likes, I am going to bring on our special guest. In fact, she's here right now. Krisha, do you want to give people a quick sneak tease on your beautiful voice? If you don't get enough likes, I'm just going to kick her out of my office. So you guys are going to get a tease, and then no more of Krisha. It's been a while since Krisha joined us on a live stream. Oh wait, is she even here, Krisha? Don't be shy.
Indeed.
There she is. There
How's
she
it going,
is.
you guys?
It's gonna be a casual stream today, guys. Very, very casual. Don't expect much because honestly, most of the TA has been pre-done for you guys. We've been talking about all of these bearish events for a while now, and we got a lot of crap for it too on the comments saying these guys are always bearish, always bearish. It's funny because last year, same time, June, July, we were being called perma bulls and got a lot of crap for that. So yeah, we are perma bulls and perma bears. Apparently you can be both, Krisha.
Turns out, if, well, you know, it is contrary, if our stance is contrary to the popular sentiment, that's usually the way the markets tend to bend.
By the way, let us know. Can you guys hear Krisha fine? Perma mango all the way. Yeah, that's the trade you gotta be taking. Perma mango. Alright, so I think we should go ahead and get started. Again, there's not much to talk about, but I will switch on over to the charts. We're looking at Bitcoin over here. We did have a measured move drawn out, and Bitcoin seems to have hit that measured move. Now, keep in mind, guys, that just because we have a measured move pointing to that zone does not mean that Bitcoin's going to bounce over here. Okay, it just means that that's the minimum target. In fact, I wouldn't say that we bounce right over here. That being said, let's go ahead and look for contrarian reasons as to why I may be wrong. And one of the biggest reasons why I may be wrong over here, again, I wouldn't say wrong really, but yeah, wrong. 4-day 200 moving average is right over here. Okay, right over here, the 4-day 200 moving average. Let's go ahead and pull that up. It seems like it's getting defended. Okay, so two things pointing to a bounce over here, or rather at least a profit-taking relief rally, kind of pointed out by Rusu Paul on the chat. So that's lining up with that, right? So we have two things. One, the measured move pointing right over there, and the 4-day 200 moving average, which by the way historically has been a good region to be flipping long on the retake of the 4-day 200. On the retake. So usually what I've tend to notice is that you do get to see a bounce on the first test of it, like right over here. We traded this, we were long over here, right back in this. How many of you were around at Mango watching us during this period? Very, very eventful times. But you guys can see that on the second retest of the 200 moving average on the 4-day, we didn't hold it, right? We just plowed right through it, closed underneath it. But that doesn't mean that it's a bad level. Just because we plow right through it, it doesn't mean it's a bad level, because the market does respect it. Let's zoom in over here. You guys can see that rejected, consolidated around it, though put in an ascending like triangle formation, reclaimed it. Mango went long right over here, okay, and we took the trade. This was easily one of my best reads of the market, where when we went long over here around 7,700, Krisha, remember we were looking for 10,500 as our target.
Yeah.
We very rarely have targets for Bitcoin. We're looking to keep trading the trend, but market conditions at the time was speaking to a resistance level, major resistance level, and a pull down. And then it was Krisha's birthday, so I did not take the shot that was screaming at us in the face, and we missed the big COVID dump shot. But hey, at least we weren't long. Yeah.
Sean's always missing trades because of my birthday.
Yeah, Jesus Christ.
But no, I don't know. The 4-day 200 simple is, it holds. I feel like they're just better levels. If you're looking at just historic price action, you're looking at fractals, you're looking at signatures on the charts. I think there are better levels on besides the 4-day 200. I don't think it holds that well. I think it more often than not we see a spill, right?
You see
and this time around. Go on, Sean.
Yeah, like even in the 6K breakdown, right? What I'm trying to say is that the 4-day 200 moving average at the very least is a bouncy-ish kind of level where people are likely going to be taking profits, because the 4-day 200 moving average, like the 4-day time frame, is the Mango time frame. And we've got to respect the key levels on it, right? The 4-day 21 EMA, the 4-day 200 moving average, the 4-day 10 SMA. Historically, what I can tell you, Krisha, is that each time we've not given those levels respect, we've regretted it. Right? You'll agree with that.
Yes.
Right? Even in 6K break, you did see a bounce on that level. Yes, we did come and break through it. We did spill through it right after and consolidated underneath. What happens after? Again, once we reclaimed it, it was off to the races. Again, over here, reclaimed it, off to the races. Again, the COVID dump. The big signal for us, Krisha, was the 4-day 200. The reclaim is really important.
Exactly. I think it works on the bullish end more than it works on the bearish end. I feel like for the bearish end, if you're looking at a spill over into lower levels, then I'll be looking for, you know, levels other than the 4-day 200 symbol. But on the way up, the 200 symbol has been pretty good so far. But let's talk about, Sean, the structure of everything right now. Have we taken out the lows on the weekly? So essentially we were holding that weekly structure, right? And initially the thesis was, hey, you know what? If we actually see a bounce and we see the structure hold in terms of the higher lows, we could see this macro sort of thing turn into a bull flag of sorts, right?
Yeah.
We were looking at an ascending triangle actually playing out. But in fact, we got rejected at the Keynesian right there, as you can see on Sean's chart. And what do you know? The bears took over, and now we're coming down. We've broken the weekly cloud as well. So now, question is, Sean, have we taken out the lows? So I can see that we took out the last local low that we put in at the bottom of the cloud.
We've taken out both lows in this okay, how about this? If you had to look at this rising channel, right, and you mark out these two lows of the rising channel, we've taken out both of those lows now. So now here's the big question: will that cause a spill on over? So the bearish move over here is if we actually test the top of the cloud again and get rejected. In that case, I'm looking towards 20,000. I'm looking low. I'm looking really low, guys. But if we do start seeing a hard bounce over here, okay, and we see it needs to be significant. It needs to be the kind of wick that makes it needs to shock and awe. Okay,
yes.
Just shock and awe, right? In that case, I'll be looking for a complete reversal, and I'd be saying that the crypto market is essentially calling traditional finance to reverse as well.
Yes.
I'd be saying that, okay, most likely there's going to be some narrative coming in by Jay Powell in around June, July-ish, end of June at the very least, saying, okay, you know what, markets have been crushed, inflation is low. Like, if we get two more inflation prints that are relatively lower, we're going to start seeing a narrative shift, and that narrative shift is going to essentially be a repricing of everything that has been priced in, which is inflation scares, right? So inflation scares get unpriced, if that's a word. Again, you guys can look at the same thing in COVID, right? This was the big COVID scare, but once COVID hit, what happens? Markets rally because everything's priced in, and once the scares are alleviated, there's nothing much anymore to be priced in anymore towards the downside. I think the markets are in a state of, let's put it this way. It's not that people are being forced sellers, but they are selling to front run the rest of the market, right? They're not forced sellers, not yet at the very least. This isn't like, I'm trying to find examples from the top of my head, but long story short, what I think is everyone is in a net short position of their core allocations of S&P, Bitcoin, altcoins, etc. And it's a game of who can sell to someone else and make sure that he buys back his position at a lower price. Everyone's trying to buy back at a low price. It's not that they're trying to get out of losses yet. We're not that. So? I don't think we're at that position yet. Not in crypto. And not in SPY. It's the bond market.
What about, so I agree there, right? The traditional, I think, took a beating. Like, crypto actually held up pretty well compared to traditional. I think many of us can agree. Like, some of the traditional charts look like absolute shit coins right now.
Yeah, that's Shopify.
So we were looking at charts and we noticed that traditional took a pounding. But as far as crypto is concerned, Sean, do you think that the panic can stem from the altcoins actually dropping right through? Now there was a scare on Luna, and
Luna looks fantastic, man.
On the higher time frames, yes, but a lot of people, they're looking at some of the lower time frames, and and the thing about Luna is that it's a volatile chart, right? It is extremely volatile. The weekly, and some of even the lower time frames. It had like some crazy moves to the upside, and I keep repeating this. When you see crazy moves to the upside, when you see immense volatility to the upside, you can expect the same sort of volatility to the downside as well, right? And that's what we're seeing right now on Luna. But
so just to be transparent to everyone, Krisha is in a Luna short position, so she is biased. And of course, I'm not in that position, so I'm biased towards the other side, right? Again, like I said, I think Luna's your short position is clearly working out for you, so good for you, good trade on that. But I think there are weaker coins to be shorting, because Luna is still maintaining key lows. Again, Luna has a scare, but I think it's gonna. I don't know. I don't know how to feel about this one, so I'm just gonna say nothing. Actually, what are your thoughts on it? You're in the trade.
I'm playing the TA. I'm playing just the TA, just pure TA. It's been a busy past 2 months for us, so I've decided that this is going to be a range play for me. I intend on taking profits on the next range.
Okay, so where is that?
On the next support. So I'm looking at the bottom of here. Just get on over. I'm playing the weekly chart on the weekly time frame on Luna, and yeah, I'm looking at the lows coming in right there.
Okay.
So I'm looking at that. That's the range that I'm gunning for. It's busy, so I've decided I'm not riding the trend. So it could spill over, and that's the thing with Luna, right? I saw weakness across the board, and I'm like, there's no way Luna is gonna hold up in all of this. And this is a lesson that I've learned from the previous markets, just playing the previous turn in the markets, from the bull market to the bear market, and even those strong coins that really hold up, even those tend to give in, and you can see the news follow through right after the coin gives in on the technical front, right? And that's why I always say that there's a good chance, not a good chance, it's more often than not, the news hits the charts before it hits the papers, before it hits the blogs or whatever it is that you guys read, before it hits crypto Twitter. You're gonna see it on the charts first, right?
I agree.
We see this so many times. So once again, I just followed the TA on this. And that's the thing, if Luna has a lot of hodlers and it falls through, we could start seeing panic there, panic that could spill over to other charts when people try to liquidate and they're seeing, you know, their positions fall through, their equity going down. So at that point, that's what's going to sort of bring in the panic.
Yeah. I just noticed a comment from Mock. He said the trick is to plan things before price gets there. Yeah, that's usually that's usually how you want to do it. The stronger trick is to make a plan and follow it no matter what, regardless of how you feel at the time of execution. Right? We talk about this often, where you have to divide yourself into the trade manager and the trade executor. Just keep it very simple. Two versions of yourself, and the trade manager plans the trades. You as an executor, you just need to execute what the manager asked you to do. You don't ask questions, right? The manager needs to deal with the issues after the trade unfolds if it goes badly, but you need to follow what your manager tells you, right? So divide yourself into two people and just follow the trade, and that's where TA really helps. It allows you to stay objective. You guys are seeing now firsthand how many of these things that are happening in the chart kind of front run the news, right? Like with Bitcoin showing weakness on the December close, right? Bitcoin showing weakness on the December close. On the monthly, when we failed to close above the 10 SMA, that was a big first warning sign when we were looking towards levels right on the monthly 21 EMA. We're going over this over and over again, but I think it's going to be educational for us to do so. Regurgitation helps. And then the big sign, next huge, like that's it, all right, we're going bearish on everything, was when we lost Bitcoin's monthly 21 EMA. There's no you can't get cute with this. You guys, you just simply cannot say, you know what, I'm going to make an exception this time because I don't believe that the Fed has it right, or this and that. I think the market is wrong, blah, blah, blah. No, guys, that's not what there's no point even following TA if you're going to do that. There's no point. Don't even look at the lines on the charts. Don't even look at price, right? Or just look at the number every single day. Don't look at the charts, because TA is here to keep you in check. TA exists to make sure that you don't don't go beyond certain perimeters that will allow you to get wrecked. And for me, that perimeter was monthly 21 EMA and the monthly dynamic. Okay, not the Ichimoku version. Let me just go ahead and switch on over to. Okay, right over there, the dynamic calculation, the original dynamic right over here. You guys can see that we close underneath, right? And what happened right after that? We essentially tested the Tenkin, right? And then that was a signal to exit all coins too. And remember, we talked about this. We said 39,000, Krisha. That was going to be the sell.
Yeah.
Right. Bitcoin didn't even overshoot, right? Like a lot of people probably thought that we'd overshoot to 40,000. Honestly, I was expecting that. I don't want to take any risks. Boom. This is bearish.
Yeah. No doubt about it. And the thing is that this has been like, Bitcoin told us as soon as it broke its weekly 21, by the way, and that was back in freaking May, right? That's when the crazy ass dump happened. That was the weekly 21. When it tells you it's doing something different, it's doing something different. It's breaking signature. You need to take that as a clue that, okay, things are changing. You need to be prepared and you need to be leaning on the prudent side than going, you know, full throttle. So now that we've broken down, right? Question is, do we see that spillover here? And people, you said, are expecting a capitulation wick, right?
Yeah.
Is that's the popular sort of theme right now on crypto Twitter? People are expecting a capitulation wick. Now, I want to know how many of you guys are in the same boat, right? You guys are all expecting a capitulation wick. How many of you?
Yeah, you know what? Quickly, guys. As soon as you guys hear this message right here from us, I want you guys to all type the target that you guys are looking for or think that Bitcoin is going to get to if we see continuation from here. No thinking about it. Just the first number that comes to your mind immediately now. Mock says 28K. And then reverse. The number keeps coming up. 28K. Sure, you had a target for what? 29K?
Yeah.
Yeah? You think we stop there? Jay Hale says 31K, Alvaro says 30K, Murali says 29K as well, Aaron Watson says 20K, Shom says under 30K, you gotta be more specific than that. What does under 30K mean? Wick down to 14K, close about 30K? That could happen. So he's essentially saying 29K in a fancier way because he wants to be unique, you know. I see what you're doing there, Sherwin. It's not working. Julian says 28K too, but if we lose that, weekly 200 moving average. So why 28K? Because of these lows over here. Is it a horizontal? Is it a key level? Kush has 29K as well, so it lines up with that. But I want to know, what's the objective reason for 29K? It's these wick lows? These 28K lows? What is it? Am I missing something? I mean, don't get me wrong. I was looking for 28K in this zone over here, right? That's where I was looking for 20K. Krisha knows that very, very well because we were like aggressively trading this area here, doing videos like every single morning was Bitcoin. This is the most educational area, I think, for the traders out there. But I might be missing something. I want to. We lost 100 moving average on the weekly too, Krisha.
Ooh. Where does the 200 simple come in at on the weekly?
It's way lower. 20K. Somewhere around there. 22K. Oops. 22,000 now.
And guys, the 200 simple on the weekly has a pretty freaking neat signature. Just zoom the hell out. Get on over to your weekly time frame and zoom out. Tell me what you guys think of the 200 weekly, right? Every time we think that this time is different, it's not usually different. Now, I also thought that this time is different for the loss of the weekly 21 EMA, but once again, this time was no different, right? It just seemed like everything was way faster, at least with the crypto space, because technically after the COVID run, right, let's think of how this all sort of played out. COVID happened, markets dumped, and then we started picking up that steam. But by the time Bitcoin was picking up steam, we saw traditional run. Like there were bankrupt companies going to all-time highs, right? That frenzy was ridiculous.
Yeah, crypto didn't. I think SPY outperformed Bitcoin. Like,
no, it did.
crypto,
think about
like
it.
Shopify outperformed Bitcoin.
And Shopify compared to Bitcoin, I mean, there's no, God, there's no comparison. There was no comparison, right? But once again, now because of everything that happened, I thought, okay, you know what, maybe perhaps the signature changed this time. But no, once again, the signature remained steady, right? We lost the 21 EMA. That was hinting at, okay, the markets are cooling off here. And now once again, where we're at this crux in the market, this juncture in the market, where now we're coming back down to certain levels. Now the one level that's always sort of played out is that weekly 200 simple moving average. Now the question is, do we get down there, right? Coming in at around $21,000.
The weekly exponential moving average 27k. Honestly, guys, I personally think that if we lose 30k on the weekly, I don't think we're stopping at 28k.
No.
I think people trying to long that. There was someone I know on Twitter who isn't much of a trader, but decided to go 10x long on on Bitcoin at around 34k. And like bragging about it, I guess. I don't know, not bragging about it, but that's kind of when you know that, you know what, that's liquidity. This is liquidity for the market to be taking from people. And I think 28k might just be liquidity, so be careful. If the market does reverse from 28k, I'm going to be very happy, of course, and we'll see signs of it, right? But as soon as we start breaking 30k, I think the edge towards being long at the 25k under region is a lot more appetizing.
Yeah.
Usually Bitcoin consolidating between the spread of the 200 exponential and the 200 moving average, right, is a sure bet. No, I don't say sure, nothing sure in the markets, but it's good edge, right? You accumulating a position between the spread of the 200 and the 200 exponential moving average, and you use that to know how fast price is likely gonna move towards the upside as well. So let's go back to BLX as well, Krisha, if I find it on my list that's getting freaking.
Do you agree that we're stepping into an investing juncture of the market?
No.
Long-term investor juncture?
No.
No?
No, I don't agree.
That was very fast. No.
I don't agree at all.
Nope. I think anything underneath, at least this is my opinion, this is my personal opinion, and not meant as financial advice, of course, but I'm saying anything under weekly 21 EMA the monthly 21 EMA is a great buy.
Yeah, you see, when the 200 exponential and the 200 moving average are really further apart from each other, right? Price has a longer consolidation period on its lows before seeing the reversal. Kind of makes sense, right? The exponential moving average and the 200 moving average together, you get a guide as to how far price has moved away from its median or mean, right? And then over here during the COVID dump, there wasn't much of a gap between the two. Why? Because price has been consolidating down and up for the past years now, since 2017's high at 20k. We went up to 20k, came down to 3k, went up to 10k, 14k-ish, came back down. So this was a massive consolidation. I mean, we have it drawn out here for you guys. So now again, you guys can see that the width over here isn't that wide, but it still is wider than the COVID dump. So this lines up with, Krisha, what you were saying, is that if we do come down over here, we won't spend as much time as 2018 and 2019, but it won't be as quick as 2020 either, the V bottom. What are your thoughts? Or do you think it's a wick? I'm not talking about the wick on its own. I think there's going to be a wick for sure. I don't say for sure.
I'm not calling a wick.
But I don't think it's going to reverse as fast as people think if we do come down here. If we do come down here.
Okay, that was like really extraordinary circumstances that we saw in COVID, right? That was something very, very unexpected. The market wasn't expecting it. The governments were not expecting it. Nobody was expecting it. So there was a lot of and things that the markets need time. Like generally, economically, we all need time to adjust to turning conditions. The thing about what happened in the COVID dump is that no one really had time to adjust to anything. When markets have an ebb and flow, and that usually reflects even in your physical world. You see people maybe draw back on expenses, right? When COVID happened, there was no like general flow. There was no ebb and flow of the market. Things just dumped. So the government really had to step in there. So over here, what's happening is that you can see that the physical world sort of contracting in a way, right? And with that, if we see that dump to the downside, if we see another sort of gradual sort of move to the downside, I don't think it's going to be a V bottom up this time, right? It's going to take a bit of, I think this time around we may have that rounding formation giving us the sign of a reversal pattern, and then we will resume the next bull run.
I think it'll be a lot easier to trade.
Yeah, I don't think it's going to be a V bottom up.
Yep.
And I'm not I mean, I think it's really it's overconfidence, honestly, to call, and if anyone calls a wick, a capitulation wick, I mean, how? Like, how do you say that, right?
I know there were people who were calling for capitulation wick here, and without a wick, I'm not gonna, like, people that are really good traders, right? People that you guys, like, people who are really, really good, and there was this confidence in that the markets need to bottom with a wick. And that confidence, you and I, Krisha, we stepped in and said that can't be true. That can't be true. That's not the only way markets bottom, right? And you don't see that, you don't hear people say that anymore. And what's funny is it did end up happening later when nobody was calling for it with the COVID wick, right? Yeah. So you don't, my long story short is you don't really know how markets are going to bottom. Markets could literally bottom out of boredom, right? Yeah. People just giving up. Like I think gold is topping out. Or rather bottoming out at the top. That's what I mean to say. Bottoming out at the top. Out of people just getting bored of it, right? Like you see long-term gold holders just capitulate out of it saying, F it, I'm not doing this anymore. So what I'm trying to say, guys, long story short, is conviction can get dangerous if you're not willing to be wrong. Right?
Yes.
So have conviction and trade your conviction, but be willing to be wrong on your trade.
Well said.
So I don't know, Krisha, about how this is going to play out, because I think the markets are already at such a tight juncture. Like you mentioned something really key that I wanted to touch on. You said the financial markets have contracted. Right? The biggest difference between the COVID dump and the dump that we're likely going to have, the dump that may come. I'm not saying likely. Okay, I want to take that back and walk back on that. The biggest difference is going to be that the market conditions during COVID was the Fed coming out and saying, literally, the Fed came out and said, we will do whatever it takes. They literally said that, we will do whatever it takes to fix the financial markets. We are coming out with a bazooka. They use the word bazooka, okay, and they were playing the game since back then in terms of forward guidance being their biggest tool. Right. And the markets reversed before the Fed started doing anything, and they reversed in a massive way.
Yeah.
Okay. Most recently, ever since the inflation got out of control through the narrative perspective, the Ukraine-Russia war, and the inflation CPI prints started coming in aggressive, and people were paying ridiculous prices for their gas. The Fed switched that around, and their narrative this time around was, we are going to do anything to get inflation under control, right? You heard FOMC members come out on a regular basis over the past months and do like these meetings with interviewers and say things like, we will have we will do what it takes to get the stock market down by 30%. The stock market's not low enough. They were saying things out loud like that, things that they don't usually say, because they wanted the reverse effect of what they did during COVID, or right after COVID, where during the COVID event, they came out and said, we are coming out with a bazooka.
Yeah.
They wanted to instill the market with confidence because they didn't want people sitting on the sidelines with their money.
Yeah.
Right?
Yeah.
Because markets would have got crushed. Now they're doing the opposite. They want people to go onto the sidelines with their money because they need to reduce demand supply and demand together form the inflation issue, right? They can't control the supply problems, Krisha, because the supply problems are coming in from Russia, Ukraine, right? Oil, right? China looking inward, China deciding to have lockdowns. They can't control any of that.
Exactly.
But what they can control is demand. So what do they say? They say things like, we are going to do whatever it takes to get the stock market under control. 75 basis points is on the table, right? That's what they were saying. That's what Jay Powell said just a month ago in an interview. Now he's come back and walked a little bit back on that, because I think they might be beginning to gear up for a narrative shift. Because I don't think they have any intention of really getting inflation under control, because inflation being out of control while the market doesn't care, or rather while the people don't care about it, is in their favor. And I'll stop there. I'll let you get your thoughts out.
I'm just sort of thinking about this. People are going to care. People are going to care about inflation if rates are high. If they're not able to take on credit to pay for their bills, right? And North America is a credit-based economy. Let's all face it, right? North America, if you are in North America, or if you've lived in that region, you know that it is a credit-based economy. And I feel like they are going to care about inflation if credit is not cheap. Credit is not cheap, because you can't save there, right? I mean, it's very, very hard to save in North America. And as someone who's lived there, I know that firsthand. It's not an easy thing to save there. So it's really going to depend. And the thing about what's happening with the Fed right now, what's happening with the whole thing of, the economy expanding and contracting, is that the Fed only has control over one variable. Okay, now there are two variables here, guys: supply and demand. Now this is like high school economics, right? You're looking at supply and demand, and the markets they're trying to get the market right now to hit a sort of thing of equilibrium, right? And that's what they're trying to get in under control. They want the market to hit some sort of equilibrium to get inflation under control. But the problem with that equilibrium equation, Sean, is that they only have control over the demand side, right? The supply they do not have control over, not when we're still living in a globalized world where we're relying on various countries that are going through their own sort of turmoils. Yeah. Right? So they're banking on that, also holding a certain thing of status quo. Yeah. Right? And if it doesn't, for whatever reason, things can get worse.
Exactly.
At least that's my sort of thought process around the entire thing.
Yeah,
but
you mentioned cheap credit, that's another thing to keep in mind. When people wanted to leverage their assets and like take a line of credit on their homes, for example, and buy Bitcoin, right? Taking a line of credit on your home or home equity loan, right? That was a lot cheaper to do back then. Now with interest rates, mortgage rates sitting at around 3%, 4%, that becomes expensive, right? The cost of capital becomes expensive. We talked about this for a while. That affects risk markets. So I think people should just be cautious of not getting the same V bottom up if we do break down. And okay, by the way, I'm not saying that we're breaking down over here. I'm not saying that we're going to get a capitulation. I'm not saying any of that. In fact, like, I would say that one of the most unlikely scenarios that people are not expecting is literally sideways for the rest of the year from here, right? One thing that nobody's talking about is what if the Fed actually manages to pull off a soft landing? Because people are waiting for the market to break. Everyone's afraid and everyone's waiting for the market to break. Let's just say, or let's look at the conditions of the market at the moment. And you can read the conditions of the market by looking at the US 10-year first. Okay, and Krisha, look at that. We've come up and hit is this the monthly level that I have a horizontal? Oh, wait, no, is that I have a horizontal here. It's probably a monthly level. Yeah, that's a monthly level that we marked out. We've come up, we've hit right up against it, and now we're seeing resistance. If that starts topping out at our level at around 315, it's going to give us validation that, hey, TA is everything to begin with. Secondly, it's going to line up with probably the equity markets and crypto markets also seeing a bottom very, very soon. So, however, on the flip side, if we do break out from here, that's going to be freaking that's going to be spectacular. Okay, you shouldn't be looking at the bond market on log chart, by the way, guys. So just heads up over there.
Has it broken out of the 200 simple and the 200
Yeah,
EMA
on the
monthly time frame? That's a 200-month sort of record that they've broken there, guys.
Let's pull that up.
That's not Sean. That's actually pretty.
I don't know though. I don't think there's enough history. I guess
I mean, it's a moving average, right?
Yeah.
It's a moving average. You're looking at the data on the chart, and the data so far has been in a perpetual sort of downtrend there.
Like I would expect this to top out at the very least, put in a higher low versus just keep going. Like this is ridiculous. Like we were pointing out this bull flag breakout over here, but for it to have just gone up like this, right? This is extreme tightening. The markets literally just said F you, and like the bond market got crushed, guys. Like remember what we taught. Yields going up means that the bonds are selling off.
So I have a question, Sean, since you're really, really privy with with these markets, and I think you're really good with psychology. I think Sean is. So right now, this is the 10-year that you're looking at, right? It's going for 3.14%. At what point, like that's a pretty decent yield, right? At what point do you think that investors are going to be like, oh, okay, you know what? I think I'm getting a good return on my dollar spent on bonds, and I'm going to start buying, because it's the buy pressure that ultimately will lead to lower
like
yields.
3% is really good. If you believe in let's put it this way, if you believe in the future to some way, through one way or the other, beginning to get a position in treasuries right now starts becoming really, really attractive, right? You could be wrong, and price could go up to 4% and be higher, but that's how you hedge through having a commodity position as well, because commodities are going to likely be the reason why rates keep going up. But let's say that you believe in the future and you want to hedge some of your capital in a 3% yield. That's primarily because if you believe in the future, it means that you believe in technology, and technology is exceptionally deflationary on the rest of the world, right? Technology is the counterforce to the inflationary pressure that we've had on everything else, right? So you book a 3% yield on your treasuries. You start buying, maybe start getting into NASDAQ, right? Buy the index, or you buy equities that you believe in, Tesla, whatever. I don't have any Tesla, FYI, guys. I'm just saying, this is what I'm seeing the rest of the market, or rather traditional market participants, likely going to do. 3% starts becoming really, really attractive. 3.5 becomes very, very attractive, and then above that, I think the Fed starts panicking, because remember, guys, the US as a whole is in massive debt, and that 4% is going to spill on over to what they need to pay out on a monthly basis, right? So their outgoings start increasing, and when they can't finance their own debt, along with market conditions being extremely tight, because remember, if the US 10 years, if rates are really, really high, you're going to start seeing layoffs. If you start seeing layoffs, it means that people are not spending as much. Not only that, people are not spending as much, and plus income tax receipts, right? The amount of income tax that governments receive from people starts reducing, right? So income tax reduce, sales tax receipts also reduce, right? And on top of that, government's expenditure in terms of what they need to pay to finance their debt goes up. So they're getting double whammied in terms of they have to pay out more because freaking rates are 4.5%, right? And they're getting less because people have been laid off, no income tax. Let's not forget, employment insurance is also now something that they need to worry about, right? Because they got to start paying out all the social welfare stuff, right? So like, it's really easy to foresee rates going really up, right? But is it feasible, or are they going to come in with their bazooka again?
That is a brilliant point, guys. The thing on taxes, that is every government's major business, taxes, and especially the US government. This does not bode well for them, right?
Yep. So I'm just saying, like,
that is a very, very good point.
Because if the government step in somewhere around this zone through a narrative switch, right? They can step in through any one of their tools.
Yeah.
Through forward guidance, through a narrative switch, through actually quantitative easing, through yield curve control with them just pegging the yields at around 3.5%, 4%, whatever they choose. Rates could just stay down here forever, right? And when you start yield curve controlling, you're essentially debasing the dollar.
Yes.
When you start debasing the dollar, you start making growth assets with longer duration look more attractive, right? So where people are like, oh, all right, I don't need to care about I don't care about value, quote unquote. I need to care about long-term growth, right? And that's when you start seeing a reversal in everything that is getting crushed right now. So again, the 10-year is sitting at a key level that is poised for potential reversal over here. The US 30-year is sitting at monthly resistance as well, at the 200 exponential, actually 200 moving average as well as the 200 exponential. There's also a horizontal level, I believe. Yes, it is a horizontal right over there. Let's put it out for you guys right there. We also have oil. Let's pull up oil.
Oh yeah, what's happening?
Yeah, oil is also tightening, guys. So we have a lot of tightening forces all in place that are beginning to start showing signs of potential. Again, this doesn't look too bad, right, compared to like a few days ago. But let's look at the weekly. The weekly doesn't look too bad either, if I have to be fair. And all of this this looks like a bull flag. If this keeps going up, it's not going to be good for the market financial health, right? It's a tightening force. Like what, the Fed is going to come in and start applying rates on top of this?
I mean, there's also going to be the thing of increased competition, right? When there's asymmetric, gains to be had, even in terms of digging for oil. Suddenly, when oil becomes a lot more valuable, companies are a lot more incentivized to go and start, excavating or start sort of researching whether or not, there are some oil fields out there because it is profitable for them. Now, we could have like free market dynamics actually step in to bring oil prices under control. But I think another thing that could be driving up the price of oil is that if there is a tightening force in terms of money, right, the available credit in the market, that could also sort of drive up oil, especially if there is a supply crunch, right? There's few dollars chasing few oil barrels. But hopefully it hits some sort of equilibrium. I think at this point, companies should be incentivized to actually go out and start, digging for oil, start producing more.
Well, the problem is that they need investment to be able to do that. And this ESG narrative has essentially made it really taboo to invest in fossils. So there's that going on as well. Yeah, so it's
so there's that's nuts,
right? The Fed wants the Fed is relying on supply chain to fix itself, to ease the inflationary pressures, but like I'm not seeing it.
There has to be some sort of dynamic, some sort of narrative shift in order for this to actually hit a sort of thing of equilibrium there, right? There has to be a narrative shift here. Because you're right, actually, the thing with ESG plus expensive credit, that will add pressures onto companies wanting to go out there and look for oil.
Yeah.
Right?
I want to know what the chat thinks over here. What do you guys think? Oil goes up in price or down in price over the next, let's say, a year? Right? What do you guys, the trend? Okay, I'm not talking about short term. Talking about the overall trend. I want you guys to just say up or down quickly. First thought that comes to your mind in terms of you guys being able to, and I'm not talking about the price on the chart actually, forget the chart. I'm saying, what do you guys think? Are you guys going to be paying more for your gas, or are you guys going to be paying less for your gas over time, right, over the next 1 year? Alvaro says up. He thinks he's that the expectation is important, guys. So up. Sean says up. Rusu says up.
Man.
Murli says up. By the way, Murli, have gas prices in India been going up or down? Considering that Modi has been getting some good deals from Putin. Julian says up more. Bike everywhere. Nice.
Spoken like a true European. Just bike it out, guys. pump and go. Ooh, $5 to $6.
That's crazy, man.
And the thing about oil, guys, oil goes up, everything else goes up. So it's going to be like, you know, the Fed is trying to control the whole thing of, you know, of loose credit. But then as soon as prices of oil go up, it doesn't matter. Everything else will go up.
Yeah. Yeah.
You know, he does not, that control over the supply variable, he does not have control over that. And if there's anything that could be a catalyst to the next sort of, you know, crunch in the markets and the next big volatile move in the market, it's going to be that. It's going to be because the Fed does not have, you know, any control over the supply variable of things.
Okay, so tell me something. Let's say you're sitting in the Fed chair. Okay, you're a central banker, right? And your people come up to you and say, hey, I can't pay for my utilities. I can't pay for gas, right? What are you going to do? What's the first thing that you think to do? How do you control that? How do you control those kind of inflationary pressures?
Oof.
Like, what do you do? Increase rates? Won't that increase the cost?
Yeah, no, it's going to increase the cost, right? It's going to increase the cost on the people, right? To be able to facilitate those payments. Free credit, either cheap credit, right? Either rates come down. Essentially, what they did during the COVID.
Yeah. So wait, like, let's be more specific for the sake of the audience. You just said free credit, so you're going to give people the ability to take a loan.
So basically, I'm gonna try and bring the rates down in my country.
Okay, how?
So that they can take those loans. However, they're still going to be paying interest on those loans, whatever interest they can pay.
So Krisha has been reading a lot of Thomas Sowell, which is why I'm putting her on the spot. Right? Thomas Sowell is a renowned economist, one of my favorites actually. So yeah, so you're sitting in the driver's seat over here, Krisha. What do you do to bring the price? Like, how do you help the people? That's all I'm saying.
I'm under pressure, guys. Well, look for deals outside to see if there's any other efficient sort of economies out there producing the goods that I need, and see if there's a deal that can be struck. If not, then I'll try and reduce rates somehow to be able to facilitate cheaper loans, so that the people can get access to cheaper loans, so that they can fulfill their obligations.
Yeah, but the problem with that is that the people who usually struggle to pay their utilities, they usually don't qualify for good loans from agencies anyways. Right? This is one of the problems with wealth gaps, right? People who are wealthier get access to cheaper and cheaper and cheaper credit for the rest of their time, right? And life just keeps getting easier, and during hard times they have access to cheap credit, while people who aren't wealthy, during hard times, they get screwed even more. So what do you do? Is this sound low, guys, or are we okay?
Turns into a welfare state.
What would you guys do? I want to know what the chat would do too. Welfare state. So essentially,
like Canada.
So sub.
Yes.
Right? No, that is the answer. That is the answer, actually. Like, you're just gonna end up giving a check to everyone. They're like, okay, my utility bill is £500 or $500. All right, here you go. Here's £250. Right, that cuts your utility bill in half, essentially.
Yeah.
So that's like fiscal spending, fiscal stimulus again, that we've not seen during even the 2008 financial crash. Giving people money directly, not through the banks, not through reducing interest rates, right? They could keep interest rates between 2 and 3% for a very long time and keep easing the pressure on people by literally giving them money.
And I think it's very it depends on even the country, right? There are some countries and some governments that don't really care. It's like the Pareto's rule, right? 80-20. So 20% of the population will fulfill much of the tax obligations that the government needs, right? But then again, there's first world countries, right? Quote unquote, first world countries, like the States, Canada, and other European countries, whatever, they rely on good optics to be able to actually get in more immigrants, to be able to basically fund that tax account that they so need to bring some sort of balance back into their books. So it's very important for them to maintain a level of, what do I say, integrity among the populace, right? Economic integrity among the populace. So they're going to be a lot likely to actually give out, helicopter money than a developing nation, right? I don't see nations like India and China really caring much in terms of helicopter cash. They're like, okay, whatever, screw you. Figure it out. Right? And that's why there's a lot of like black money flowing in those economies. There's a lot of under the table money, if that's what you want to call it.
Because
right?
India and China didn't do much in terms of...
I don't think so, at least. I don't think so.
So, and their populations are the most in the world.
Yeah.
So how did they get away with it?
There's it's a cash-based economy. One is a credit-based economy, and then
China?
I'm guessing China's, has anyone really lived or been to China?
I mean, of course, we're going to have people in the audience who...
cash-based economy, right?
Like,
there's a cash-based economy and there's a credit-based economy. I'm sure there's
universe.
like a lot of black money going out there. There's a lot of, untaxed money out there.
So, Krish, I'm looking at the US dollar, the Dixie at the moment. What are your thoughts on this? This is
Breakout.
also really surprising.
Breakout.
Guys, like, there's no way the Fed isn't looking at this and thinking, yeah, everything's okay, because this is affecting the globe at this point. Unless, okay, if the Fed just lets this happen, or governments just let this happen, it's them essentially throwing in the towel on globalization completely and not giving a rat's ass anymore about what other countries have to go through in regards to their debt, right? Because like I've talked to you guys about multiple times, a lot of countries have dollar-denominated debt. The dollar going up like this is essentially putting a lot of pressure.
We're already seeing it, Sean. Like, so Sri Lanka is in a economic mess, but they have other issues in their government. There's also Nepal, I believe, that is going through some sort of turmoil right now, and they've banned, apparently, imports, various weird imports into the country, only so that they can save on US dollar reserves, right? So we're seeing the crunch right now for dollars. And these are just a few countries. There are going to be more coming up now, developing nations once again that are going to be in crunch for more dollars. And the more that happens, the more Dixie goes up, the more that's going to happen. Yeah. We're going to see more countries start capitulating on their reserves. So keep your eyes peeled on that. And that's another force working against the Fed in terms of really facilitating some sort of liquidity in the market, because it's going to be bad. It's just going to be bad all around.
So Chauvin says allowance per month to spend using CBDCs. Oh God, no. Let's assume CBDCs never come to fruition. I do think they're going to give people an allowance by literally just sending them money, right? I'm looking at Kusha right now to get ideas, but somewhere along those lines. But let's assume CBDCs don't. There's not enough time, I think, in my opinion, for them to come up with these solutions. CBDCs is still a bit far off, I think. Derek Diesel says, account for ideology as a force and also opioid crisis. You're going to spend it on drugs because you're depressed, because you don't have a group, because you don't have work. Yo, man, you have mango. Okay, all of you have mango. Don't do drugs. Please, God, don't do drugs. Just come, chill with mango. Right? Have fun with us.
That was a true slippery slope fallacy there, man.
we make the most depressing times fun. Like the last bear market, we were here playing Brawlhalla. We had a blast. So yeah, don't worry about it. Join Mango. And don't think about sad things, because sad thoughts lead to sadder thoughts. And yeah, Murli says Sri Lanka economy also broken. Your Sri Lanka story is pretty funny.
Apparently, the entire government is run by one family.
Yeah, and
Turns
Pakistan is
out.
funnier too. It's like, and India is in the middle of all of it. You guys saying, guys, calm down. You're making us look bad. And then Dubai is like, alright, we'll carry the look. Singapore is doing pretty well too, I think.
I haven't heard of Singapore in a while.
That's how well they're doing. Currently banking my head on the wall for not selling Cardano at 250. Yo, if you've been watching Mango, you probably sold well ahead of time. Well ahead of time. Or you watch Mango and you thought we were stupid and we were caught. Krisha actually was one. If you look at the big smile on her face, Krisha got a lot of crap for calling bear market on Cardano. I think that's around the time she stopped doing altcoins for this season. That's when she knows to stop doing altcoin videos where people get toxic. And she called the top on Cardano before most people. And again, like usual, people don't want to hear it, man. They only want to hear the price is going to go up, right?
I think no. What happened there was Bitcoin actually lost the weekly 21 EMA. I'm like, guys, bear market, and I remember mentioning it in the Cardano video, and they're just like, this girl just said bear market, guys. She just said bear market.
Yeah, this is why girls shouldn't do TA.
The amount of times I've been told to go and find my place in the kitchen, unreal. If only Sean would get food poisoning.
Mango, macro, and crypto. When discount, guys, please. I'm calling it. I'm gonna make an admin call. You guys get a 20% discount on Bitcoin while Bitcoin is underneath $35,000 for the next 48 hours.
What?
I was like, whoa, no, okay, 15%. Whoa, hold up. Sorry, I mean only if you guys pay in Bitcoin. Only if you guys pay in Bitcoin. Apologies. So
that's
yeah,
Sean's conviction.
I mean that's easy for you guys to do, right? Just go take your USD, buy Bitcoin with it, and you guys get 20% on Mango. There you go. I called it.
Wow.
Yeah, that's me. That's me showing my commitment to Bitcoin.
It's a high conviction trade, you guys.
Krisha doesn't let me handle any of these things because I
because I have to handle it. He says it, and I have to handle it.
She's looking at me.
Oh, okay.
Yeah, but only for the next 48 hours. So if they don't, Krisha, if anyone emails you, with this over the after the 48-hour mark, you can just tell them it's done.
Okay.
All right.
There we go.
Yeah.
Notice how he's just pawning it off on me. He's like, just tell them, Krisha. Just tell them. So you just tell. I'm gonna say it, and you tell them.
I have things to do. All right. I can't.
He's a busy bee.
Sean
the busy bee.
Okay. So next question, guys. It's all the way up, lol. Brandon, are you delayed on the live stream? You might be, or either that or I missed something. I missed so many opportunities.
Brandon says the volume is too low. Is anyone else having a problem with the volume? Please let us know. We're trying. All honesty, we're trying something new this time. So let us know if the volume is a-okay.
Oh, they can't hear me well.
Can't hear you well, Sean.
How now? How now? How's it now?
Volume is a bit low. And Wilby's got everything at max. Bada bing, bada boom. I'm more interested in altcoins, Sean.
I'm going to turn down the music, and that should fix the issue, guys.
Completely?
Yeah, completely. Alright? You guys don't need music. Krisha has music to your ears. Anyways. Are you cold, Krisha? Krisha's cold.
No, there was a light that's just like...
Oh, right.
But yeah, if you're cold, you can turn off the air conditioner.
Alright, let's do some TA, Krisha. What are your thoughts? Bitcoin further down here? Bounce?
We're going down, boys. We're going back to Earth.
Let's do
we
some
went
action.
to the moon halfway through, and we're going back to Earth. How about okay? So I have a question for all you guys. How many of you guys are prepared for 19K? 19K. How many of you are prepared for the previous high to be tested? Because that is also a major possibility. And that also is going to depend on how many of you are thinking of taking on leverage while Bitcoin is dumping, during the dump. So essentially what I mean by this is Bitcoin is dumping all the way down to, say, that 24, 25K region. I noticed that when we asked you guys, where do you see Bitcoin heading? Many of you said 24 to 25K, right? 28K also. How many of you are thinking of taking on leverage at those regions to be able to facilitate your buy-ins?
Attaboy, Wolvie. I'm in a leverage trade at the moment. Short leverage though. You can be leveraged in the direction of the trend and be relatively fine.
It's good. I'm noticing a lot of people are saying spot.
Yeah, that's good. That's mango for you.
Sherman, did you just say leverage short? Yes, looking for it.
What's wrong with leverage short?
I'm saying 19K region. Okay, spot. Okay, yeah. Okay, leverage spot.
Oh, no leverage, just spot, nibble here and there. Ah, I see.
Okay, that's good. Yeah. I think 19K is a massive possibility, Sean. 18.7 19K region is a massive possibility.
Oh,
and
yeah.
I don't think a lot of people are expecting
You know
that.
what no one's expecting? No one's expecting 14K, and that's what the TA is saying. TA is not saying, it's not really saying 19K. It's saying 14K. And look at Krishna's face. and that disbelief is exactly why I think that there's a higher probability of us coming down to 14K versus stopping at 28K. And in fact, you take 28K divided by 2, boom, even your 2x leverage folks get freaking wiped out. That's perfect. You think that's a coincidence? No, it's written.
I do have a look of disbelief on my face.
Nobody wants 14K, nor do I. But
I don't know, man. That breaks so many signatures. Think of the amount that breaks. Like, it's so like when Do
you remember the morning I woke up and I saw Bitcoin at effing 3K? I'll never forget that. I couldn't believe it. It was such a disbelief that I was able to capture that moment and long, right? But I'll never forget that again for the rest of my life.
That was actually really good execution.
That moment will never leave me. The feeling in my chest. It was such a shocking moment that I knew I had to effing long it, right? And because of that, you can't discount a moment like that again. Nobody thought we'd reach this zone again, right? 3K. Well, we did. I don't think anybody is accounting for 10K, 14K, and I'm not saying we do come down there for sure. I'm not calling it. What I'm trying to say is if we do come down there, guys, be mentally prepared to jump on that opportunity. Feel that moment in your chest. It's going to be scary AF, but it won't last long. Just like this did not last long. Like that prolonged month felt like forever. If you remember, Krisha, we were trading that month, but it's only 1 wick in the grand scheme of things now. It feels like nothing, right? Similarly, let's put it into perspective. You're saying 28K is possible, right?
Yes.
Okay, so let's say the candle is something like this, right? How unforeseeable is it to say that this candle that we have here has a wick like this?
No,
let's draw it, right?
I mean,
and it's a wick that could change your life forever, guys, if you're not prepared for it on both directions.
Yeah, you need to be prepared. It's important, of course. I think it's gonna be. No, I don't want to be cocky here, right? I'm not gonna say it's gonna be a wick to 14K. We could very well. Okay, how about this? Okay, I'll say this. We could very well get down to 14K, but I'll say this. I don't think it's gonna last there too long. So if the last bear market lasts 6 months, I think this is gonna be 2 months, 2 to 3 months.
Yeah, no, I agree.
And that's gonna be it.
So the last bear
It's
market
gonna
was
give you
1 month.
very, very little time to be a buyer on that region.
I think.
And someone just mentioned, Sean, sorry, before I let this go, Jamie Leroy says this 100K Bitcoin feels like light years away. He says 100K Bitcoin feels like light years away.
Yeah.
And the thing about Bitcoin and just the crypto chart, Sean, we've seen firsthand, all right, bear markets are reversed in a matter of 2 months. And we're talking about a year-long bear market being reversed in a matter of 2 months, right? So take that in. These things can reverse. They reverse very, very quick.
Exactly. I totally agree with you over there. In fact, I was just pointing out to someone else earlier today how Bitcoin can easily have a 20% candle in a single day.
Yeah.
It will take it'll bleed out 4%, 4%, 4%, 4% over a very long time and go down to like 25%, and people will feel the pain because it's so slow. But all it takes is 1 day for a 20% candle in the other direction, and you're just thinking, damn, I can't believe I wasted so much effort of emotional damage to myself. So think about all those things, guys, and understand that things can turn around very, very quickly in both directions. There's a good question over here by Fatal Vision. Any thoughts on Russians' plan for a new commodity-backed ruble and the potential detrimental effects it might have on the USD world currency reserve status? That's a really good question, and we've actually answered that in detail in a podcast that I did with Shervin and Krisha. Shervin is here with us on he's with you guys actually in the chat at the moment. You can find that on our channel. It's called The World's Next Reserve Currency. Shervin, if you could link it to Fatal Vision, I think he'll enjoy that podcast. That was a fun podcast. And if you guys do want more of that, please let us know. We're kind of like in the validation phase of running a idea like that, where we do more podcasts, macro podcasts more often. We want to get a gauge of what you guys enjoy, and if you guys don't enjoy it, of course we're not going to do more content around that topic, right? So let us know in the comments.
Sean, how will you prepare for the next bull run?
The next bull run, I'm going to be looking at strength in all coins like we did last time. Last time we found Cardano, right, was being extremely strong, while like during the Bitcoin run, Cardano was the first one to outperform in a massive way. And every dip that Bitcoin had, while other altcoins were getting crushed, Cardano was doing really well. So I'm preparing right now, actually. I'm already watching for that. In fact, let's go ahead and give everyone a tip. I don't say tip, but basically, I think that Neo could be the next Chainlink coin in the way it's been trending so well against Bitcoin.
The volume has also been pretty.
And look at the monthly. Holy, yeah, guys, look at that. It's you can't ignore this. Look at this. Let's turn off the Ichimoku. It's a beautiful trend. There's something going on over here. You cannot ignore this. When you start seeing something like this, right, it's opportunity to trade it. It could get invalidated, and if we start closing underneath over here, of course we're not going to be trading it anymore. But at the moment, it's looking very, very tempting. Kisha, just take a look at the monthly. Over here, look at that. This is during a bear market, right?
Wow.
Like last month it didn't do too good, of course, but none of the assets did well. This one is seeing a bid regardless. Something is holding this up. If anyone has any information on Neo, I'd love to hear about it, just and what the narrative is at the very least. So yeah, I think we'll be wrapping up over here, Kusha. Any final thoughts?
God, I have so many thoughts. I'm trying to think back to how I felt during this juncture of the market the last time around. I'm gonna say this. Whatever you do, if price falls further down, you need to check yourself if you find your emotions running wild. If it means going for a walk, taking a walk, to check yourself, do that. Because more often than not, when I look back in time and I look at those sort of trades that I had and I was really panicking on them in the previous run, I just wish I had just taken some time, taken a moment to just sit back, evaluate my emotions, and then get back on over to the chart. If you think that they're swinging on an extreme direction, it's very, very important to evaluate that emotion. Come up with a plan for yourself. Okay, plan ahead of time. Plan for the next move. Keep planning for the next move. Do not panic. Whatever you do, do not panic. And if you're looking to buy in on any dips, at this point, also question your conviction in whatever it is that you're getting into.
Yeah, that's some really, really, really good advice. Wisdom over there. Krisha, I'm looking at SPY at the moment. What's it saying to you first?
Sorry, I'm thinking back to that one event on last bear market. Things were free falling, and I messed up.
Yeah.
And yeah, like you guys don't understand. I was in tears. I was in freaking tears.
That was something.
Yeah. So
we've had our moments,
panic.
guys. We've
Don't
had
panic.
our moments. Yeah. Like, don't panic. I remember Krisha's her fingers were actually shaking.
Yeah, dude, I was shaking.
She was actually shaking,
I
guys.
was freaking shaking. It was such a bad blunder. So, evaluate your emotions at all times.
Don't even like thinking about that moment because I
was
hate
a
seeing
scary
Krisha,
moment.
thinking of Krisha at that stage.
Scary freaking moment.
Yeah, we've had our moments, guys. And if you guys go through your own moments, understand that we all do. We all do. And you can very, very well come out of it. And in fact, if you react fast enough, you can fix it right there and then. Yeah, but Krisha, SPY.
Oh, SPY, my darling. What is SPY doing? Sorry, I'm just pulling up the chart. SPY.
Nasdaq in free fall.
Julian just mentioned that Nasdaq is in free fall. So is SPY right now, and you can see that there are like these very, very clear head and shoulders patterns, and they all have these drooping necklines. By the way, since for those of you who are in this chat right now, there's around 50 of you watching. So here's a quick tip. If the neckline is drooping, all right, if it's drooping, you can see that neckline is drooping.
Are we looking at SPY?
We're looking at SPY right now. If the neckline is drooping, know that there is immense technical weakness building up on the chart, all right, which means that when the break comes, it's going to be quick and swift. It's going to be very, very fast.
Yeah, this is.
So that is a quick tip for those of you who actually like trading patterns. When it's drooping right there, beware of what comes next, because the next move is going to be volatile.
Is this neckline broken down?
So no, just zoom out. There's a much bigger sort of.
What time frame are we looking at?
We're looking at the weekly, I believe. The monthly.
Ooh.
The monthly, and you can also see it on the weekly too. But it's it'll be clear there. Sure, you can see it.
So this is broken then?
Yeah, it's broken. I'm gunning for the next 200 simple, I think. On the weekly or the monthly? One of the charts. I don't have...
Oh, this is brutal. This monthly SPY looks like game over.
Tightening. The Fed is tightening, guys.
The last time we saw something like this was exactly the time where J Power was tightening and quantitative tightening as well. Right over here, guys. I did do an entire live stream for you guys where I went through the history of the Fed's funds rate increase and everything, right? I think I have it here saved. Yeah. I went through the entire history with you guys. Do you guys remember this? So go ahead and find the live stream and go through it again, because it'll be alpha in the surest way.
Oh yes,
Go through and watch this. But basically over here, guys, SPY breaking down late 2018, 2019, J. Powell was in the same mindset of tightening, reducing the balance sheet, essentially double tightening with the two. And the market said, well, F you then, and they sold off. And J. Powell had to come in Jan and basically pivot. That's the famous J. Powell pivot. Rallied all the way into the COVID dump. Boom.
Prediction for SPY?
Me?
Yeah. I'm saying 345. 345 susceptible to
is that a
change.
Target? Is that like a measured move?
For me.
Measured move? Okay, because that lines up. That lines up with the bottom of the cloud. That lines up.
Yeah, 200 simple moving average. I think that's going to be the key level. We're breaking into the cloud. I think there's going to be a clean edge to edge.
So what,
if the market sees more weakness, of course, and given that the Fed does not come in with more easing tools, if the current situation remains status quo, I'm saying SPY comes down to that 346 region, 345, 346.
So keep in mind, guys, SPY is already 15% from its highs. This is another 15% from here, right? Bitcoin is 50% from its highs, I believe, right? Yeah, it is.
Conviction levels.
Hold up. Let me do my stupid, brainless analysis. Okay, let's start again. SPY, 15% from its highs. All right. Krisha's target, which is lining up with Ichimoku, 15% more ish, right? So if Bitcoin is 50% from its highs, which it is, another 50% would take us to 16K. Ouch. So we don't want that. We don't want that analysis to come true. It's a really shabby analysis, by the way, guys. It's nothing. It's just fun. But yeah, it's not fun when you think about the target, right? But hey, keep in mind that if SPY does see some sort of liquidation event like this, funds who put on position sizes, if most of Bitcoin is being held up by macro funds who put on position sizes based on volatility, and they try to match volatility based on their other assets, could see Bitcoin actually see a sell-off that leads to liquidation events that lead to spill on over to 15K, 16K. Why not? Julian says that's also monthly support around 350.
Yeah. Yes.
Yeah. He's right.
These are going to be high conviction levels.
That's the key, June.
Yeah,
what? We're testing the monthly Tenkin at the moment. What about the 21 EMA?
You guys, you should see the doubt on Sean's face right now. He's like,
Monthly 21 EMA, we haven't really closed underneath it.
Okay, I'm gonna.
We could bounce here. I'm not convinced.
Yeah, if we drop from here, my high conviction for SPY is gonna be 345. For Bitcoin, it's actually gonna come in at around 19K. 19K is gonna be my high conviction zone, given that we drop free fall from here.
Well. Scary targets. They're gonna be massive buy
opportunities, so. For those of you who are long-term investors,
but remember, guys, I think there's enough reason to look for a reversal in sentiment right over here, considering that the major tightening indicators, I'm looking at Dixie, I'm looking at the 10-year and the 30-year, they are at major inflection points. All right. We're sitting at resistance. The SARS coming down. SPY is going to ease up. SPY eases up. Bitcoin eases up. SPY sitting at monthly Tenkin. Enough reason for that through a technical analysis perspective. We're seeing the 10-year again at resistance. We're seeing the 30-year at resistance. We are seeing the Dixie at let's wreck the world kind of levels at the moment. But yeah, Dixie's looking scary. The euro dollar is probably getting freaking wrecked, that means, right? Euro. Yeah, of course. There you go. Oh, holy shit, it broke. It broke a massive trend line, Krisha. Check this out.
Damn.
Yeah. Anyways, guys, I hope you guys enjoyed the stream. Did you? If you did, leave a comment underneath the video.
And
hit the like
likes.
button.
Yes,
yeah, exactly.
Hit those likes, guys. For those of you who are still around, hit them likes. It helps the channel out tremendously.
Yeah.
lets us know that you guys like this sort of content. That way we will be doing more impromptu live streams.
Alvaro says, so much going on. I think I chose the best time to study trading. You have no effing idea, man. I think you chose probably the best time that we are likely going to have over the next 50 years. Like, literally, the best time. This is the best time to study trading.
Volatility has returned to the markets, guys.
Like, I've been in study mode too myself, with so much to read through history, through the history books, etc. Like, you're getting practical knowledge in the plumbing of the markets, because usually studying how the Fed works, how the financial monetary system works at the moment is kind of boring and dry without being able to see it, see playthrough live, right? You're seeing playthrough right now. Like, the bond market has never been this exciting, guys. We are seeing the biggest wealth destruction ever in the bond market, at least over the past 250 years. Like, Bianco Research has put out some really good charts on this. It is ridiculous. The epicness of this bond market move is ridiculous. So, and then we have Bitcoin. On top of that, we have equity is doing what it is. It's just amazing. Commodity is in an inflation run. This is the time to be starting. And yeah, with that, Kusha, I'm going to be wrapping up. Any thoughts? No, right? You've given your thoughts.
I've given my thoughts.
With that, guys, do the mango way, do the easy way, do the stress-free way. Ciao.
Ciao, you guys.